Markets are down. This is Monday. First, it started with the Asian markets, now the U.S. markets. Last Friday, the unemployment report came out. It was higher than I think was expected. However, if you've been watching my shows 3 days a week since February, I've been talking about the fact that the 2-year and 10-year is inverted, meaning we're in a recession. I think we've been in one for a while. We've had job losses. We've had inflation going up. We've had unemployment going up. And we've had GDP coming down. Now, things are cyclical. Markets have corrections. Corrections are normal. Over time, things go up, typically too much, and you've got a bubble. Many people believe, as I do, that we're in a real estate bubble, and that will correct as well. So when things inflate, then eventually they correct. Oftentimes they will overcorrect. So what do? Well, first, you don't panic, because chances are you've been able to hopefully diversify your investments, and you haven't invested money that you can't afford to lose, or more importantly, you haven't invested money that you're going to need in the short term. I've got videos below on how to create emergency savings and also how to make it last longer. I've been discussing that all year. Every Friday we talk about assets instead of dollars, because with inflation, dollars lose value, and over time assets go up. But people don't make money, particularly generational wealth, by selling and panic selling when things go down. So, will things go down more? I think they will, because usually in corrections, there can be around 10, 15%, sometimes more, sometimes less. They can last 30 days, 60, 90, or more. So typically these things can take time to work their way out. Personally, I'm not panic selling. I'm continuing my typical plan, dollar cost averaging into investments and things like commodities. And then also I've got my emergency savings. I hope you do as well. So continue on your plan. Don't panic, but take the time to make sure that you've got a budget. You've got your emergency budget. Watch one of the videos below where I talk about the difference between your regular budget and an emergency budget in case you might, for example, lose a job. So there are a lot of things going on right now. And there's a lot of uncertainty in the world, whether it be potential wars or whether it be things like unemployment or the election. So that's not good for markets. Markets like stability because they like to know, generally speaking, what's coming in the next couple months or years. And the more stable things are, then the more reliable markets can be. Watch this here because I'm going to show you an infographic that has been very well done, and it walks through the fact that this is not uncommon. Here is the infographic. Just going to walk through this really quickly. I'll put a link in the description down below. Market corrections. And if you look down here, and this is interesting, this is actually, it says MSCI. They track all sorts of equities and things. And over the last, since 2008, what they call this current bull run, meaning the market, as you can see from the left to the right, has been going up. There's been 8 corrections. 9.5% down, down 16, down 22, down 12. You can see down 18, 19. Okay. And this goes to about 2020. And of course, now in 2024, there will be another blue line showing a correction. Does that mean it's going to continue to go down, or might it continue in a run up? We don't know, but market corrections, the point here is, are healthy, common, and expected. Now, what to expect? It's interesting. It's a great graphic here. It just shows you over time. It says there's about 1 correction a year, tells you about 15% decline around 71 days long. Was that 2 to 3 months? And then, of course, afterwards, uncertainty, volatility. Doesn't mean this is what's going to happen, but they're just averaging some of the past. And then if you look at this, which I think is interesting, from 1980 to 2018, so over this 38 to 40 year period of time, 5 of these bear markets, meaning when it went down and there was a correction, continued to go down. So they ended up being in a bear market. 31 of them eventually turned back into a bull market, which makes sense because over time, the markets would go up and to the right. There's a lot more information here. It's very interesting. It's a great graphic, quick read. Again, it'll be in the link below, but I just wanted to point out, hey, don't get worried. Don't panic. Market corrections are normal. All right, so that was it today. I just wanted you to take a deep breath, that these types of corrections are normal, healthy, and expected. And remember, the government doesn't care about you. Banks don't care about you. It's up to you to take control of your financial future, because real freedom is financial freedom. Have a good day.